What is going on? Oh, he's here. He's here. He's here. I thought there's no way. I thought he was not happening. How are you, Lucas?
You know I wouldn't leave you.
I figured you would, but I thought maybe I'd get you in the car on the way home from the bar or something.
Man, a lot of people tried to convince me to just do the live stream at happy hour.
That would have been a little aggressive, but you're all good. You're all good. I felt bad leaving, but all right. So thanks for joining us. My name is Sam. That is Lukash. Where's the H? You spelled your name wrong.
I know, my bad. I just kept it simple.
My name is Lukash. So we're going to be talking real estate investing. Let us know where you are from. So here's how this live is going to go. I'm going to be a little all over the place, a little obnoxious. Luke's going to be a little more focused than me. He's going to answer the questions a little more precisely than me. But in general, we're going to give good answers. So put your questions in the chat box and let us know where you are from, because we want to know where you're from and get a feel for where everyone's from. We're going to talk about the market, give a little update on what we're getting into. I've had a lot of people on TikTok up there very interested in the self-storage stuff. So, Luke, let's get into that a little bit tonight, what we're doing and what we're thinking about doing. I know we're in the very preliminary stages of that one deal, but we can talk about it a little bit. And then we'll go from there. So, Louis, while people are telling us where they're from, why don't you give a little bit of a market update, man?
Yeah, the market is still hot, guys. I think we sold about 70 profit-wise, about $73,000 in assignment fees the past like 2 days. So that's really cool. A big part of our business is wholesale, but also the market is hot for rentals and also for just retail sales. So in the past 7 days or so, we sold about 5 properties, and we got about 5 or so lined up for January already. So we're excited. Market is hot, 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 hot. So
Louis, do I look a little bit like pale kind of because of this dim light? It's all right. I was told to look like Clark Kent today with these on. I thought I look like an ugly Luke Bryant. So anyways, there's that. So here's my take on the market. So I think I get asked all the time, and I do want your opinion, Lucas. We had our little collective genius thing with John Burns and all that last week, so I feel pretty confident about the market. But what I learned, regardless if the market's going to be hot in 3 years, is I already kind of knew this, but I heard it explained. The government and Fed is propping up the real estate market. The real estate market is floating the entire economy almost right now. The real estate market is, floating everything. So that makes me feel confident and not confident. The confidence is that they are floating the entire they're floating it up, and it's keeping the entire economy kind of buoyant and out of trouble. So that's good, because I think they're going to continue to do that, because I think that's their goal. That's their way they're going to drive the economy up. What do you think about that?
I like that, and I'll take our industry, holding the economy up right now, because I feel like our industry got hit the hardest back in 2008, 2009, 2010. So a lot of us investors and home builders still remember that. So we've stayed well capitalized over the past decade. So we're ready for anything to hit us. So we'll put the rest of the economy on our shoulders for a little bit.
I like it. All right, let's get some people. We got Michael on here saying hey. We got Ernesto. We got J.E. We got Marilyn in the house. Keep letting us know where you're from. Hi, Sam, Lucas. What's going on? Salim, I've seen you on my stuff. What's going on, Louise? He's in our LRA, Lucas. We can talk about that a little bit, but he's in our LRA. You've seen him answer questions. Ohio, Texas, Pennsylvania. We got kind of people from all over. I get people from all over the U.S. here in YouTube, but on my TikToks, I have people from Trinidad and Tobago today, Tokyo, Australia, and Mexico today.
Very cool. All over the world, not just the United States.
Yep, Canada, California. What's going on, Brian? Minnesota. All right, keep letting us know where you're from and start to fill the box up with questions. So just kind of showing everybody, let's keep the questions going about real estate investing. A little bit about Lucas and myself. And then as we're doing that, give us some questions. Make sure to like, share, and comment whether you're on Facebook. If you're on Facebook and we get up to 10 likes, Lucas will drink a beer and smash it on his head. So get us 10 likes on Facebook. Share this if you're on Facebook and YouTube, please. We're going to be talking real estate investing.
At least one of those things.
Yes. So I want to talk a little bit, Lucas, about favorite thing about real estate. And then make sure you guys are asking your questions. These lives, if you've never been a part of these, they're question and answer. We don't like to just talk and not know if it's hitting home or if people like what we're talking about. But if you ask us questions, we will answer those questions. So obviously if you're thinking of a question, ask it, because I guarantee you other people are. So let's fill up that bot with questions, or that box with questions, and we will answer every single one, whether it takes till midnight or not. That's a little bit of hyperbole, but we will answer every single one. So fill up that side with questions, and we will get to all of them. All right, Louis, what is your favorite thing about real estate?
I'm going to give two. So
I said one. I'm getting two's fine.
Yeah, the money's cool. I get that. The money will come, but my favorite thing is just the freedom and the lifestyle that it provided for me and my family. I like to go into work and do business, but I don't have to every day if I don't want to. I can go on a trip for a week or a month, or and have an awesome team behind me running the show and still making us money. So that's one thing. And the other
you left the office the other day at like 10, and you said I'm not coming back. So there you go. Yeah.
So well, I have that freedom to do so, right? All right. And the other thing is just the scalability of it. In the you can accelerate your business to a level that I've never seen before. And I know you can in other types of industries and other businesses, but with real estate, you can get to where you want to be, whether that's financial freedom or a huge nest egg. You can get there very, very quickly through the smart uses of leverage and a team. So just the scalability of it is my second favorite thing.
I like it. So my favorite thing is, I'm going to talk for a minute, and it's probably not going to answer my favorite thing, but I just love the power of it, because 90% of millionaires are created through real estate. Not like I decided I became a millionaire, so I'm investing in real estate for the tax benefits. While there are those, 90% of millionaires became wealthy through real estate. So why wouldn't you take it? It's obviously the path of least resistance, the least barriers of entry, and people do it and it works. That other 10%, there's probably thousands of little bitty niches that you have to be super smart in that niche to become a millionaire. But real estate, honestly, Lucas, you don't really have to be that smart. I mean, I'm kidding. Dusty's been on here, well, you too, and me. But you don't have to be that smart. You just have to work hard, have determination and a perseverance, and you can and will be successful in real estate. I think Brandon Turner coined the phrase, and probably not exactly like this, but the only failed real estate investor that I've ever met is ones that have quit. They got 4 or 5 properties and quit. Everybody else is successful as long as they keep going, because there's so many different avenues, to be successful in real estate. So I just like that there's so many different ways to be successful, and it's the easiest way to become a millionaire. I mean, yeah. I guess that's the simplest way to say it. If you want to be a millionaire, get in real estate. It's the easiest way to do it.
For sure. And it gives you the freedom to do another thing. Say you have the creative mindset that you need to create something new, because real estate's not new. But if you want to get rich, this is the only for sure way to do it. And if you do it right, you will be rich flat out.
Yeah, I don't know. Like I said, every successful real estate investor I know, every real estate investor, they're all successful if they're still investing. Wishes they started earlier. I mean that is. So just get started and get going. So let's get to some questions, and then we'll get to some advice for new investors. We'll get to a few different things here in a minute. But let's get to some questions. Keep the questions coming. I'll keep everybody. We got Panama City here. We got BJ on here. What's going on, my man? All right. So here you go, Lucas. I got TikTok right above me, in case you didn't know. So I'll read the question out loud, and then I'll let you answer this first one, then I'll get to it. So how do I start out with real estate? Do I need LLC to buy houses and rent them out? That is the question. And Lucas, go ahead, and I'll fill in if I feel like you missed anything.
Yeah, not necessarily. I would recommend you getting an LLC, though, for liability purpose, especially if you're going to rent them out and you're working on the houses. There's contractors, could possibly get hurt or something. But how do we get started with real estate? Create an LLC and go find your first deal, buy it, rehab it, refinance, use the burst strategy the Sam teaches all the time, and get a cash flowing asset.
I agree completely. And I wasn't really paying attention. I'm sure you answered it well. I was looking at the next couple of questions, but yeah, I always tell people there's 2 things you want to don't be smiling at me. I see you, Lucas. There's 2 things that you need, or the first 2 steps to get invested in real estate. If you're starting a muffler shop, if you're starting a drop shipping, if you're starting an Amazon store, whatever you're doing, there's 2 things you need to be successful, in my opinion. The first 2 things in any business, and real estate's no different. You need connections and you need knowledge. You need a basis of knowledge to be successful and understand what you're doing. And then you need connections in whatever you're deciding to do, whether it's real estate or not. But we're talking about real estate now, obviously. So you get the knowledge by subscribing to our TikTok, YouTube, Instagram, especially our YouTube. last week, you know how many times, Lucas, I got told that we give away too much for free? You know what we're doing? We're giving away more for free. So you can learn a ton by subscribing to our YouTube. You'll get a basis of knowledge there. You can follow other people too, obviously, but you're going to get a basis of knowledge by following our YouTube. More than, I mean, people pay tens of thousands of dollars for what we give away for free. So that's where you're going to get your basis of knowledge, and you're going to get connections by joining your local real estate investing Facebook groups and meetups. If you do those two things, you join those Facebook groups and meetups, you follow us on YouTube and implement what we say, you will be successful. It's not going to happen next week or next month, but eventually you will be successful. I can almost guarantee it if you're willing to work hard and follow our steps. All right. We got Olympia Fields. I don't know exactly where that is, but sounds like a magical place. We got Abigail from North Carolina. All right.
Do you know where North Carolina is, Sam?
What?
Do you know where North Carolina is?
I think it is by Arizona.
No, it's by South Carolina.
Oh, is it above South Carolina?
Yes.
Okay, perfect. All right. So, Leo, I'll answer this one, Louis, and feel free to add on. We don't have a ton of questions, so you can elaborate a little bit. Leo says, what's the first quarter look like for buyers? After what we heard last week, I feel pretty confident that the market, I guess I'll talk about the market in general, is going to be pretty good next spring. I could honestly see maybe a little blip with these forbearances and foreclosures, but I think that sounds like that will sort itself out pretty quickly because there's so many buyers that those will just eaten up at not super low prices. So to keep the market kind of high. So I could see a little potential blip, but in general, it looks like, in my opinion, from what I've heard from people that know way more and they're way smarter than both of us, the market's probably going to look pretty good in most markets all of next year. What do you agree with?
Yeah. So what that looks like for buyers is it's still going to be tough, because right now it's tough for buyers too. Whether you're an investor buyer or a retail buyer out there, inventory is so crazy low that it's tough to find good deals. But they're still out there, so keep looking.
Yes, I agree completely. All right. Blair Stewart, can you explain the contract process when selling it? Let's talk about wholesaling. I'll just kind of start it out and you can finish off, Lucas. Basically, people, trying to understand wholesaling, if they never heard of it, I get it's a little confusing. Oh, I forgot. Before I started this out, I needed to show this, a gingerbread house. That
Dude, did you make that?
Yeah, I did the construction because I'm a constructor, and she decorated it. I thought it was pretty good.
Proud of you.
Merry Christmas, Lucas.
It looks good. I bet it's tasty too.
I did eat a lot of candy as we're making it. But so when you're wholesaling properties, you have to go in with the mindset that you're buying it. Whether you're closing on it or not, you have to go in with the mindset, I'm here to buy this house. So you get the property under contract to purchase. So you're buying the house, and you're going to sell that contract if you can't close, and hopefully there's a contingency in there. I don't know if I want to get into too much in the weeds, but when you wholesale, you buy a house on paper, and then you sell that paper to somebody else for a profit. Anything to add to that?
Nope. Well said.
All right. We got Maine on here. Listen to these guys, all the info you need. Tyler, I appreciate that very much. We got New Jersey. All right, Lucas, I'll let you answer this one. I'll read it for my TikTok folks up top. Investors in my area dominate the market and don't like to talk to the little guys starting out. How can I fund my first deal?
Interesting. How can I fund my first deal? So I'll just go with the question that you asked there. There's three ways that we fund deals. Really four. But the fourth's probably not that applicable to you. So we love private lenders. That's my favorite way to fund deals. And I also get our private lenders to fund the rehab of whether it's a rehab fix and flip or a rental that we're doing. So I love private lenders. So get out and tell all your friends and family that you're looking to invest in real estate, and if they want a safe, secure investment, to come talk to you. And then you can pitch them on a deal. You can also talk to hard money lenders in your market. We have several in the St. Louis area. So if you got a market size similar to ours, I'm sure there's several as well. And they are great asset-based lending companies out there that help you purchase a property and make sure you don't lose your ass on a deal. So they also fund 100% of the purchase price, so you have zero down payment. So I would focus on those two sources: hard money lenders and private lenders.
Yep, and just to parlay off that a little bit, hard money lenders are super easy to find. Just Google hard money lenders near me, or look them up on Facebook, or just Google hard money lenders, because guess what? Google and Facebook knows where you are, whether you know it or not. So just Google them, and they'll know where you are by your phone and your IP address, and they'll let you know the local hard money lenders. And then as far as your market goes, most people in the real estate investment industry are willing to help other people. So it sounds like you have a market. There's a couple of big dogs in your market, but we buy 200 houses a year. If you're looking to just buy and just makes it diminish, I'm not trying to diminish. If you're just looking to buy 2 to 5 houses a year, that's a crap ton first off. But if that's what you're looking to do, you're going to be able to do that. It's not that saturated where you can't get your hands on a few properties a year for sure. If you're willing to work, if you're willing to work 2 hours a month, yeah, but you're not going to find deals. But if you're willing to work 15, 20 hours a month on the side, on evenings and weekends, you will find a handful of houses a year. You agree?
Yeah, and Joe, the first deal or 2 deals, it's always the hardest. It's always hardest at the beginning, whether you're finding deals or looking for funding. Those first couple are going to be the hardest. But once you get momentum and get a couple under your belt, those investors and those people will be begging you to fund a deal and begging you for them to buy your deals if you're talking about wholesalers and stuff.
Awesome. Great question. So just so that people know that asking questions, we are 13 minutes behind on questions. So we're not that far behind, but if you asked your question 10 minutes ago, we're going to get to it in a couple minutes. So don't leave if we haven't answered your question. We will get to it. We're just about 10, 13 minutes behind. All right. Dominic, sounds like you're Italian. With 100% financing, are you also financing closing costs, nothing down? Yes, so we do. So when we do 100% financing with private money especially, which you can use hard and private money, but the goal is private money for everybody. Even hard money lenders know that. Yes, they'll give you an example. If the example that I've been using today on some of my stuff I've been going live on is, we bought a house for $90,000 and it needs $20,000 in work. So we're borrowing $110,000, $115,000 from a private money lender that pays for the purchase, the closing costs, the holding costs, and then all the rehab. And then once we refinance or sell it, if you're wanting to sell and not do the BRRRR method, then the private lender gets their money back at the end after everything closes. Are you laughing because I talk with my hands, Lucas?
No, well said.
All right, you're going on this one. Abigail asks, can you get a hard money loan with a bad credit score? I know the answer to this, Lucas. Do you?
I don't, honestly. I'm going to say no.
Yes.
Go ahead. You answer it.
So Sean in our market, I don't want to you know who Sean in our market who does hard money lending. He does no background checks, no credit checks. So there are hard money lenders out there, not that many. I would say if your market has 10 hard money lenders, 2 of them, so I guess we'll do a simple math. If your market has 5 hard money lenders, 1 of them is going to be a no background check, no credit check, hard money lender. There are those out there. So you can do it with a hard money lender with low credit, and a private lenders, I don't know any that look at credit score, but hard money lenders you can. They're a little more few and far between than the ones that look at your background and credit check. But the ones that don't look at your background and credit check, they're going to charge a little more interest. But if they're your only option, then it's worth it. And they're going to probably walk you through the deal and coach you and teach you, but you're going to have to pay for that on your deal. But there are some that do not require a background check or credit check, but they're going to be a little more expensive. And they're gonna, because they look at the value of the deal. If you're buying a house, Lucas, if I'm buying a house for $150,000, it needs $25,000 worth of work, and it's worth $300,000. Don't you think a hard money lender is probably going to fund that? Even if your credit score is a little bit bad. I'm saying that to say that they weight the quality of the deal very, very heavily. So that's why they would be willing to fund something like that. Does that kind of make sense? If it's a home run deal, even if your credit score is low, they're more likely to fund it. They do look at those kind of things.
Yeah, it makes sense. And just another reason to use private lenders and develop relationships with private lenders, because like Sam said, probably 90% of hard money lenders are going to check that credit score.
JE asked the question, but before I'm going to get to this question, Lucas, what can you do at 11? Don't worry about investing in real estate. You're 11 freaking years old. Go ahead.
I thought he meant like 11 p.m.
I'm not even going to give advice. People say they're 15 to 16. I tell them to bird dog and stuff like that. But you're 11.
Have fun, be a kid.
Yes, be a freaking kid. That is awesome. That is crazy. All right, JE, period. How do you start? Like, what education do you need before getting into this, and how do you go about finding a mentor? You want to go first, Luke? I feel like I've jumped the last couple.
Yeah, so we started with the simple stuff, books, podcasts. You can jump on FasterFreedom. YouTube page, and we got a whole bunch of scenarios that we run through, probably scenarios that you're going to go through very soon, and create videos on that. If you want to go deeper after the free education type stuff, FasterFreedom, our company offers a lot of different webinar series and boot camps and masterminds that you can be a part of if you want a little more in-depth, detailed hand-holding, and that's what the paid stuff is for.
Yep. So just send me, just go to that FasterFreedomWebinar.com. It gives you the free training and options on the pay, so forth. Send me a message on Instagram, TikTok, YouTube, Instagram. FasterFreedom is the name under there. So just look us up on there. And then, yeah, you can get some education, but eventually you just got to do it. Right, Lucas? I mean, that's what we kind of always talk about. Don't have paralysis by analysis. You just got to get a basis of knowledge and then do it. And honestly, I can't use that word, screw up. You're just going to do it. You're going to screw up as you go. But if you get a mentor, you're going to screw up less. Ready for my analogy I've been using all day, Lucas? Are you going to like it?
Give it to me.
If my car breaks down, I know a little about engines, not as much as you, but if my car breaks down the side of the road, like, am I going to just like tighten some belts, look at the battery cables, change the oil, like just try and figure it out, or either look up YouTube videos of what to do or hire somebody to do it for me? That's the same with real estate investing. Why? It's not any different than any other type of trying to figure out a solution to a problem. Find somebody else who's been there and done that. Even if you're paying them a little bit of money, it is well worth it, because even if they're charging you 2, 3, 4 grand, which is very reasonable if they're a legitimate source, you're going to get 10, 20, 30 times that in your first 5 or 6 deals. So pay for some type of help. Don't try and recreate the wheel when it's already been recreated. Is that a good analogy?
That was awesome.
I'll scale 1 to 10. Be honest.
6.5.
6.5. I was going to say 7, but we're close enough. All right. Still laughing at the 11-year-old. I love you, Reem. That's crazy. You get this one, Walls. You get this one. I'm going to go talk to the TikTok folks real quick. You answer this one. This is a great question.
Yeah, it's a question that, I mean, even we still struggle with to this day. So it's very similar to running comparable sales on a house that you're going to sell. Like, what do I list this house at for sale? And you look at comparables. Comparable rents, there's not quite as much data out there as comparable sales. But the first thing and easiest thing to do, I would look at Zillow and look at comparable houses or comparable apartments in your market. Make sure they got the same number of bedrooms, similar square footage, and also similar type of finishes. So look at the pictures. So in Zillow, it just shows the ones that are listed. It doesn't show the ones that have got rented. So make sure you look at days on market. And if there's a high days on market, say over 30, 40, 50, 60 days, if it gets up in that range, they're probably too high because they can't get the thing rented, and that's why the thing's still listed. So Zillow's probably the easiest. I know there's a couple other. I know Bigger Pockets has a resource for determining rents. I know Rentometer has something, and also if you're an agent, the MLS has listed for rent properties that you can look at comparable houses.
Awesome. I'm going to assume you crushed that one.
Crushed it.
Don't worry Don't worry about what I'm eating, Lucas. All right. What is the best starting point for beginners? All right. So the best starting point for beginners is going to be just getting a base of knowledge and getting connections. I said it earlier, so I'm not going to repeat myself too much. This is obviously gets recorded and people can watch it, but you need, in any business, any industry, you need a base of knowledge. So you're making somewhat educated decisions and guesses, and you need connections. So what you're going to do, follow our TikTok, YouTube, Instagram, and other people's, but there is not one person. I've done a lot of research, Lucas, and I know this, and I do speak in hyperbole at times, but I don't know if there's anybody or very few people that invest as actively as we do and give away as much free information as we do. There are people that invest as much as we do, but you got to pay a ton of money for any information. And there are people that give away a ton of free information, but don't actively invest. So just by following our TikTok, YouTube, and Instagram, you will be ahead of the game. And if we had our YouTube channel follow Luke's when we got started, we've done pretty well, but I think we could be, 20% more even, maybe even more, had we just been able to overcome some of those mistakes. We did pretty well, but beginner point, starting point, follow our TikTok, YouTube, Instagram, and join your local real estate investing Facebook groups and meetups. That was the quickest way I could say that. All right, we talked about this a little bit earlier. Before we answer this, we're about 18 minutes behind on questions, so we'll get caught up a little bit here. But what do you think about the crash, Walls?
I just don't see a crash coming. Personally, inventory is so crazy low, and interest rates are crazy low as well. I think the real estate market is going to be strong for another year plus 2 years. So I personally just don't see a crash coming anytime soon.
maybe 3, and that's based on our intimate knowledge of the industry and based on knowledge of people that have the most data in the entire country on real estate investing. So we don't come to that lightly. I haven't confidently said that until this week. I've thought that, but now I've got backing for that. So I agree with you, Lucas. And just quickly, so inventory is low, rates are low. So that by itself, there's probably not gonna be a crash. But the second part of that is, there are not a bunch of bad loans out there, first off, and there are some forbearances and certain things that are going to hit the systems, from short sales, some foreclosures, but we are going at an all-time low. I don't even know if you can foreclose right now. So the past 6 months, there's literally been probably no foreclosures or short sales. So there's going to be an influx of short sales and foreclosures, but it's not going to be such a big bubble that it's going to, completely throw off the system. The system can handle those. Agreed?
Agreed.
All right. I have 25 years of building experience, but does one find an investor and financer? How does one find an investor and financer? How would you find somebody? How help old Richie Sapp out, Walls?
Yeah, an investor, building experience. So maybe you want to partner with somebody that has knowledge of finding deals or something. I'm not 100%.
It sounds like he does building and maybe a contractor that builds, but he wants to do his own stuff and find his own investor, find his own money to do his own deals.
Okay, yeah. So I think an investor, a private lender, would trust you a lot just based on your experience in building. So especially if you're doing a lot of work on maybe your investment property, that's a good pitch for whatever private lender you can find. But just let everybody know, your friends and family, tell them what type of deals that you're doing and the type of return that you're going to be giving them. And I guarantee they're going to find that really, really attractive compared to what just throwing money in the stock market. So I would just let everybody know and make sure you build a little credibility package or something to present to that private lender or bank.
Awesome. So I see the Facebook likes and hearts or whatever, and I don't see the YouTube stuff. So make sure you're following us on YouTube and liking and sharing this. But if we get, I said 10 earlier, if we get 3 more likes or hearts on Facebook, Luke's going to smash a beer can on his head. All right. So from Canada, 22-year-old landlord, Jenna, that is incredible. When Lucas was 22, I was bailing him out of bar fight. So you're way ahead of the game. All right. Ernesto, love that name. How do I set rules for tenants? Is there guidelines I need to, or just make them up? So you don't make them up. So talk to somebody who's been there before. It's the Fair Federal Housing Act. So you have to treat every tenant the same. You have to have the same set of guidelines for every tenant. But no, you need to set up parameters so that it's, yes or no, hell yes, hell no type stuff. It's yes or no, black or white. There's no gray area. So how you do that is, have a standard for income, have a standard for credit score, have a standard for, background check and criminal history, and have standards that you stick to. And then as far as treating the tenants fairly, you need to create a solid lease that's been reviewed by a lawyer. And you need to stick to that lease. You have to stick to your end. So when and if they don't stick to their end, you have some legal backing. If you're not doing what they say, if you're not repairing the property when they have a legitimate request of maintenance, and then they don't pay you, it just gets messy. So treat the tenant fairly. For the most part, they will treat you fairly in return. What do you have to add to that? I feel like you probably add a little bit, Walls.
No, that was well said. And Sam and I aren't the best at property management. We're good investors. We're not great property managers. We're learning the property management game. So what I would do and what we have done is to maybe shadow a well-known property manager in your area and go through a couple days of them screening tenants and then placing tenants in houses and them taking maintenance calls and use what they use to set your own guidelines. Your guidelines can be different from theirs, whether they use 3 times net income or 3 times gross income. It doesn't matter. But like Sam said, keep it consistent. And I would learn from somebody who has done that part a lot to help keep you out of trouble.
Love it. We want to answer this one. I'm going to talk to the tickies here again. Is there a difference in doing wholesaling yourself or through an LLC? I guess
I would just say no. And I'm not sure if we can move on, but
we'll move on, Walls. I hear you, homie. How do you make a list of buyers? This is a good one. Snipe them on Facebook Market or Facebook groups. You got them.
Yeah, that is a good one. So Tayden is talking about, if you're a wholesaler, you want to get a property under contract and then be able to sell it and have confidence in selling that. And to do that, you have to have a quality buyers list. And we've formulated our buyers list and built our buyers list over years and years and years of trials and tribulation, and we're always pruning it. So we always say quality over quantity. So you could have thousands of people in your buyers list, but if none of them are real buyers, it doesn't really matter. But there's a lot of different ways. Like Sam said, go on those local Facebook groups and see the people that are dropping in their emails and figure out if they're the real buyers. But you can also, a house that you get under contract, go in the MLS and pull a radius on that, maybe a half mile or a mile, and see who's buying for cash in those areas. And those are the people that are probably paying top dollar, and put those guys in your buyers list.
For sure. We got a 11-year-old Cody's commenting on Ream's entrepreneurship knows no age. That is for sure.
Truth. Preach, brother.
I like it. All right. So we are, oh goodness, we are way behind on questions. All right. Thank you much for a lot of your knowledge. Olympia Fields is in Illinois, it sounds like. Illinois with
Not North Carolina, Sam.
What?
Not North Carolina.
Well, that was somebody else from North Carolina. Sheezy's on here. Jay Don, the queen of Section 8. So, yeah, we're behind on questions. All right, we'll get to them. What type of property? This is a great question. So I guess I'll probably just pick and choose. We'll probably go live for another 20 minutes. You go with that, Walls?
Yeah.
So we got time. I haven't seen you drinking much beer, so that you're ready to go. You're ready to rock.
Man, well, I haven't got those likes yet, right? How many more?
I said 6. We had 3. So
An excuse to get up and get a beer. So just
you get a beer. I'm going to crush this question. What type of properties would you recommend for your first one? So that kind of depends on what your long-term goals are. You can start out with a 60-unit apartment complex. You can start with a 4-plex. You can start out with a single family. Depends what your long-term goals are. My suggestion would honestly be probably get started with the single family house. You don't have to, but that is my suggestion because it's simpler. It's one roof. Tenant to deal with, one flip, one kitchen. It's just a little bit easier, and then it's easier to sell. The exit strategy is a little bit easier there, where you can sell it. It's a lot easier to sell a single even than a duplex, a 4-plex, or a 60 unit. So you can get started with whatever. But if you don't know what you want to do for sure, I think it's smart to start with the single family. Even if you know you want to do multifamilies, I still don't think it hurts to get started with the single family. You'll get to know your contractors. You'll get to know your banks. You just get to know the whole process, and it's so much easier to sell a single family house. So you can do whatever. Honestly, I know there's people that never buy single family, that just do multifamily. But if I was suggesting to you, if you asked the question, I would say start with a single family. What do you think, Walls?
Sounds good.
I'll let you answer this one. Do you hire a company to keep track of your properties, manage them, example, Remax, or do you do it all yourself?
Initially, we hired somebody, and it didn't work out great. Just in general, nobody cares about your properties as much as you will. So what Sam and I did is we kind of built out our own in-house property management team, and I know our team cares a lot about our properties.
Yep, I agree. Yeah, we tried to hire a third-party company that just didn't work out because, like you said, they don't care. They charge too much. So we brought it in-house, and that was the best decision we ever made. We had it in-house. We managed the team, and they do a great job caring about it. So here, Jason, I got this a lot today. Can we hear more about the possible storage unit deal you mentioned on TikTok earlier? So I mentioned a couple ones earlier. People love self-storage. We got to do some YouTubes on it. I feel like it's not applicable to most people, but I think most people like to hear about it. So Luke and I bought a storage facility with a vacant lot next to it earlier this year. And we bought it, and it had 66 units on it, about 60% full. We've really spent a lot of money fixing up the current units, and we got it to about 90% occupancy now. But next to it, we are building another 150 units.
Yeah.
Next to it. So it's kind of pretty big construction project, and that's going well. But we also I was just talking earlier because I was excited about, we came across a 14 acres out where we live in a really, really nice area that we're considering. We're just running initial numbers on buying it and potentially doing some storage and then maybe some multifamilies on it. So we're just got to run some numbers initially. But why don't you talk a little bit more about the storage deal that we're doing now currently? Lucas, you know the numbers, and then we can just kind of talk big picture on the other project.
Yeah, so it's the first storage deal that we did. So we're excited about it. We bought 4 acres kind of outside of our main market in one of the, I would call sub-market, maybe 45 miles or so from St. Louis City. So on that was 66 units, and we bought that for $360,000. and we're going to put another maybe $450,000 into this, and that includes 3 other buildings, fully enclosed buildings, and a parking lot for trailers, boats, and RVs. So when it's all said and done, we're going to be into this thing for, I don't know, 750, 800 grand, but we think it's going to be worth like 1.2 to 1.5 million. So we'll be able to cash out refi 80% of what it appraises at, do the burst strategy on a huge storage unit, and that thing's going to be cash flowing about $4,000 a month when it's all said and done.
Yeah, and so how that kind of looked is we use private money for the down payment, and then we use bank dispersing for the construction, a construction loan, interest only kind of thing. So that's why we're really potentially creating several $100,000 in net worth plus plus some cash in hand using other people's money. I mean, it potentially has to be a pretty cool deal.
Yeah.
Tayden, we'll name. It would be more beneficial to start bigger, more popular city or smaller developing city. What do you think about that one, Luke?
Yeah, I would probably start in a more established area. Make sure it's a quality area of town, but just more traffic, more people. In general, there's going to be more real estate activity, whether that be buying or selling. And then get some of those under your belt and kind of start maybe not speculating, but doing some research and investing in areas that you think are going to be up and coming. Don't take huge risks on it, but I would focus on, especially when you're first getting started, on more established areas.
I agree. And smaller cities are just fine. What is there, Luke? I mean, just example, we're talking to Jay Connor. You look him up, you probably a bunch of articles on him. He's a private money authority. But his town that he flips in still is 40,000 people. And I think he does like maybe 30 to 50 flips a year that average like 60 grand profit, something crazy. So it doesn't have to be a big market. I know you talk about developing or smaller city. It can be a small 40 to 50,000 population city, which is pretty small, obviously, but there's way bigger ones and smaller ones. But a 40,000 person city is not very big, but you can make a lot of money still in real estate in that size of city, I guess I wanted to say.
Last thing on that is just make sure you know and understand that market that you're investing in. I think that's the most important. It could be 10,000 people or 5 million people. As long as you know it and you're an expert in that market, you're going to be able to do well.
Love it. Is it hard for beginners? Brian says, I have no mentor, but I want to know if I can do this alone. Yes, you can do it alone. I would work on definitely finding a mentor. I don't know what market you're in. You're asked this question at 8:45. So we're a tad behind. So hopefully you're still on. If not, I don't know what market you're in. But you can definitely do this alone. But I would suggest a partner that has different skill set than you have, so you guys can help each other grow and step off of each other's skill set. But you can definitely do it, but you're not alone. You have our YouTube, you have our TikTok, you have our Instagram, you have other people you can tap into, and then we have some online mentorship that we do, some mastermind, that local or a national mastermind, and then we have some courses and boot camps as well.
Yeah, just because you don't want to mentor doesn't mean you can't educate yourself. So a lot of other ways to educate yourself besides a mentor. Ramsey,
I haven't seen that name in a while. I had a pretty good buddy, Ramsey, in middle school, or I guess elementary school, maybe middle school a little bit. But remember Ramsey? I just purchased my first rental. How can I leverage my money when I'm ready for my second, third, etc.? Crush this one, Walls. This one's got your name written all over it.
Yeah. So how can I leverage my money when I'm ready for my second, third, etc.? So it kind of depends on how you purchased your first rental. If you jumped in and used all your cash that you have for that rental, I would do a cash out refinance and pull that cash out of there and go do it again on the next one. And then after you finish the next one, do a cash out refi, pull it out, put a mortgage on it, cash flow, and then do another one. But I would also look into multiple sources of funding. So that was kind of a constraint on how quickly Sam and I could scale for a while, is we couldn't fund multiple deals at one time. So then we started, incorporating banks, incorporating hard money lenders, and then obviously private lenders on top of that. And then we became really powerful, and we never let money hold us back from a deal again.
For sure. Matt, great question. What are the advantages of using hard money lender over going to a bank or conventional lender? So it's not a question of advantage, it's a question of even being possible. Banks, even super like aggressive banks, They do not want, especially new investors, they do not want any part of a house that needs 30 grand in work. They don't want to loan you on a house that needs work, and they don't want to loan on that repair. They want to loan on a house that is market ready to rent. Even your small local banks, eventually, if you develop relationships with them, they will maybe fund, but they're never going to fund 100% of purchase price and 100% of rehab. They're just not. That's not their space. They are way more risky than your commerce banks and Bank of America. They'll only do residential type stuff. But the small local banks that are willing to invest in investors, they still want the property to be fixed up and ready to rent if they're gonna loan on it and if they're gonna do the BRRRR method. So they need some things buttoned up and it ready. So that's the thing. I mean, I would love to use a bank, Lucas. I'd love to use First State Bank for purchase and fix up, but they're just at their 4%, 4.5%. They're just not gonna do that 100%. So you have to use a private money or hard money lender to buy it and fix it up and then bring it to the better financing long-term bank notes.
Yeah, I would we call it the 3-bucket theory. So the hard money lender is for your purchase.
Explaining it. I'm great at explaining it, but you go.
Your hard money lender is for the purchase of your property. And the advantage of using them over the bank for the purchase is because they'll fund 100% of the purchase price. And with the bank, you're going to have to use a down payment unless you have an absolutely incredible relationship with that bank. So I think that's the biggest advantage. And then, like Sam said, go to the bank or conventional lender on the back end of the BRRRR to get it on a quality long-term note with lower interest rate. And hopefully you force some equity in that deal so you could not have to put any money into the deal at that point when you refinance.
Yeah, I mean, and yeah, to just drive that home, what I said a little bit and say a little better, it's not even an option. 95%, probably more than that, of real estate investors just getting started using a bank to purchase and fix up is not even an option. So it's not even on the table. So you got to use hard money or private money lending. Right? I mean, there's no way when we got started that even in that market, a bank would have funded our purchase price plus rehab. They just don't. They're just not in that space.
Unless we would have put 20% down or something.
Yeah, nothing out of pocket. So 100% purchase, 100% of rehab. Banks just don't want in that space. They're not that risky. All right. What does hard money lender expect to return? This is a great quick one. Most hard money lenders, I would say, with points are in that 12 to 18%. 12% plus 3% points or 13 plus points on the front back end. They're going to be that 12 to 18%.
And real quick, the hard money lender they're a business. They already have their rates set. So it's not something that they expect. So maybe you're talking about a private money lender. In a private money lender, you can kind of be more flexible and set the terms with that person. And I would say it's a lot lower for the private money lender, and that would be around the 8% range.
No, I agree. I always say private lenders are 8 to 12, hard money 12 to 15, maybe a little bit more. But I mean, if Brian may have not ever talked to a hard money lender, he just might be wondering what their returns are, and 12 to 18 is probably what they're wanting.
Gotcha.
All right, skipping a couple questions here just because we're 8:49. This question was asked at 8:49, so we just answered it. But just to drive it home, how much return you get hard private money? Simply put, we're moving on. Private money lenders are 8 to 12%, usually annualized. So you got to annualize that out. And then hard money lenders are usually that 12 to 18%. 18% is definitely on the high end, but I don't want to tell you 12%. And then hard money lenders offers 15 plus 3 points on the back end. That's 18. So 12 to 18%. If you have those expectations, 8 to 12 and 12 to 18, you're probably going to fall hopefully on the low end of both of those. All right, Louis, this one's on you. When you do secure your first deal, is it smart to sell for instant money or stay in and rent it out for the long game? I've already answered this one. If you don't, you go.
No, yeah, we do. It's pretty simple. So if you need the money now, sell it. But if you have another active income where that can pay the bills, I would always keep it as a rental. The rental's the long game. You're building wealth. I know it's very tempting to sell it and make that quick 20 or 30, but that money's not going away. That's staying in your rental as equity, and you'll be able to access that plus a lot more down the road if you keep it, hold that asset, and rent it out.
I agree. So you crush it. I'm going to say the exact same way, just shorter. It's all about your short-term cash position and your long-term goals. If you need cash now, that takes precedent. Wholesale or flip. If you don't need that cash now, look to have another source of income, and your long-term goals are passive income, wealth through real estate. Start buying rentals now. You do not need a wholesale and flip. The other thing is, you don't have to decide. You can do a Burr method and do the long-term stuff and you come across a deal, wholesale it. You can do both at the same time. There's nothing that says you can't do more than one strategy at the same time. Or unless, Lucas, you've seen that written somewhere. You can't do more than one strategy. All right. Are you frozen? He's frozen. All right. I'll keep rolling. Hopefully he's the one that's frozen. At least look at him. He has a decent pose. Most people when they're frozen, they're like, at least Lucas has a decent face when he's frozen or his computer died. Let's just keep rolling. I'll just mess with him. Lucas, what's going on? All right. Anyways, before we get into seeking investors, we need to set up all our paperwork with the lawyer and have all our investors agreement ready. What is the ballpark figure to get lawyer established? So to get your LLC set up, it's probably $500 to $700, Samantha. And I appreciate you commenting. Samantha commented on every one of our YouTube videos. So she's awesome. $500 to $700 for an LLC and to set up all the paperwork as far as getting investors set up. I would ballpark $1,000 to $1,500. Tonio, what books do you recommend? So I like my active income, goodness gracious. I like my active knowledge to come from podcasts and YouTubes. Because there's no books on how to collect money during all this craziness, but there are podcasts and YouTubes, a ton about it. So I like my active knowledge coming from podcasts and YouTubes, and I like books on mindset. I like Extreme Ownership I'm reading right now. I like Entree Leadership by Dave Ramsey. Even though I don't agree with his investing methods, he's still a smart guy. I like Pitch Anything. I like Rich Dad Poor Dad, obviously. I like Miracle Morning. I like Eat That Frog. I like mindset and just in general books that help you become a better person and leader and investor, just in totality. And then I like my active specific stuff on YouTube and Instagram, which my YouTube's full of it, or YouTube and podcasts. Sorry. All right, I'm skipping some questions. I apologize. We go live all the time. Do you increase rents every year? Yes, we increase rents every year. Nothing too crazy. Usually we try to stay around market price. There's no point in pushing the market every time. If you're a market price for a good house, that's where you need to be. We usually raise it $10 to $15 a month, which I know, but our owning expenses go up every month. Or every year, sorry. Property taxes go up. Inflation causes our labor to go up, causes our maintenance to go up, causes prices of, materials to go up. So yes, we do try to combat most of that with a slight rent raise every single month. I love it. All right. If I'm 18 with 20K saved up, would it be smarter for an FHA loan and house hack? Or that's completely up to you. That's really up to you. Both of those are great strategies. So just kind of run the numbers and see which one makes most sense. Let's skip on down. He is frozen, but he's gone now. I think his computer died. So yeah, I got kind of caught up to some questions. All right, he's won. He's back. Are you on your phone now?
Yeah, I don't know. My computer died. How's my audio?
Your audio's fine. That was you froze like that. I think he's frozen, and I was like, we'll see. But I was like, most people freeze like you froze. You didn't look too bad for a unwanted freeze.
Good.
So I kind of wish that you did, because I wouldn't have let you back in. I would just let your gross frozen face just ride. All right, this is a good one. And real quick before this, Lucas, he says hi. Hey, can you read the comments or not?
Oh yeah.
So Matt says, best way to connect with wholesalers. You get this one, Lucas, because I just smoked a couple. They're the best answers yet, and you were in here for them.
Oh, I'm sorry I missed them. Best way to connect with wholesalers. So yeah, we buy, to this day, we still probably buy, I would say 50 houses or so a year from wholesalers. So, 3 or probably 4 a month.
They're the number one resource, dude, over real estate investors or over real estate. Sorry.
Yeah, so the best way for us, where I found the best wholesalers is your local meetup. So whatever your market is, you should have a couple real estate investment clubs, and go to all of them, and you'll find the best wholesalers in town at those. But you'll also find some wholesalers posting properties on your local Facebook groups, your real estate investing groups that have 5,000, 10,000 members. There's a lot of wholesalers on those. So those are the best 2 ways that I would connect with wholesalers.
Awesome. Great answer. So we're gonna wrap this up. But just let you all know, make sure you subscribe to our TikTok, our YouTube, our Instagram, all our stuff. Make sure you subscribe here. Let's get to this last question though, Walt. Where is it? Just missed it. All right, here you go. What times do you go live? Is it daily? So we go live. We give out free information on TikTok, YouTube, Instagram. I go live on all three of those platforms. Lucas is with me a decent amount of the time, but I go live on all three of those platforms. So if you like this live question and answer format, make sure you're subscribed on all three of those platforms and make sure you have the notification bells hit where necessary so you get notified when we go live. We go live here, but sometimes we do pop-up fun lives, just in the middle of whenever. So make sure you're following us on all those platforms. We give away a ton of information for free. Hit me up on Instagram if you want our free training, or just go to freeinterwebinar.com down below. Thanks for watching, Lucas. Any parting thoughts? I do have a question that I would like to. Here's your question right here. Any advice? You just rock this out, and then as soon as you're done, I'm going to mic drop it and just kill it. You go.
Advice to the new investor. So I would say two things. Educate yourself, but don't do it to a point where it keeps you from taking action. So educate yourself, and then massive action. 2021 is going to be an incredible year. There's not a better time in maybe the history of the world where it is to start being a real estate investor. So now's the time. Don't wait any longer. Go buy your first rental.